It's very, very easy now for Bitcoin to be argued as a credible investment now that you've got these ETFs, you've got BlackRock recommending allocations as high as above 70% in some analyst reports. Fidelity, I think, is 3% allocation. You just run that, say 3% of $550 trillion goes into Bitcoin, multiplied by anything from 1 to 5x, depending on where we are in the cycle. You get to some very large numbers very quickly.
Willy Woo begins by emphasizing the significance of liquidity in driving market cycles. Historically, every instance of liquidity injection, whether due to fiscal stimulus or central bank monetary policies, has led to substantial rallies in risk assets like equities and Bitcoin. Currently, Woo observes a shift from liquidity tightening due to high interest rates to renewed monetary expansion, with governments printing more money. This liquidity infusion doesn't trigger an immediate rally, Woo notes, but within months the impact becomes evident. Bitcoin, being highly responsive to these cycles, typically gains momentum, especially when paired with its 4-year halving cycles. These cycles, often misunderstood as solely driven by supply shocks, are intrinsically linked to liquidity trends, creating a potent force for price appreciation.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
We're broken out of a long-standing sort of, in trading terms, a consolidation triangle, and so, like, currently there's a lot of liquidity coming into the system, meaning governments are printing more money, and with the high interest rate environment, actually money was being pulled out of the system, and you could see that we had a lot of pullback in all the risk assets, and equities pulled back, Bitcoin pulled back, and every single cycle in which liquidity was injected into the system, more fiat being printed, Bitcoin has rallied. Not immediately, it takes, I think we've talked about, more than a couple of months before it really rips and takes hold. And so we're in an era where probably we're gonna rally hard, maybe tail end of this year into next year. Typically these are 4-year cycles as well. People think it's a halving pushing the price of Bitcoin up because there's a supply shock, there's a reduction of new supply coming in, but also reinforcing that has been the 4-year liquidity cycle. And so we're in that phase now. Liquidity is climbing, as you know.
So where you see us at the end of the year, do you give predictions anymore? Can we do that?
I've always built models, and I read off what the models say. And so I don't have price targets, the model does. And my mistake last cycle was to read off what the model said. The model said it had to be under 250, under to 400 or whatnot, and it doesn't need to hit it. This last cycle it didn't hit it, and it was also the last cycle that we had an influx of paper. Right, so one of my to-do lists is to redo stock to flow, plan B stock to flow, adding the extra flood of paper, and to see if it matches. Because it is being debased, but it's only a little bit. It's like 2 to 4% debasement, but I'd like to factor that in and see if it actually matches what the stock to flow targets are. That future is coming, and we talked about the adoption curve of 1 billion people and by the end of this decade, and potentially near global adoption by midway of the next decade. So that kind of results in the performance of Bitcoin to date compounding at 30 to 80% per annum. If you hold for a 4-year cycle, because you got to handle the downward volatility, it's a volatile asset, but very reliably, depending on where you invest in the cycle, 30 to 80%. I don't think that's going to change too much. It might be 20 to 40% into the future, but that'll be just about every single VC fund. It'll beat the S&P 500, the NASDAQ, every asset class that we know of on this planet. And so if you're a long-term investor, more than a 4-year outlook, then given that there's no counterparty risk on this asset, it's the safest investment on the planet, taking a long view. So for my family, we are anywhere from 40 to 80% allocated to Bitcoin with the long view, knowing the 40 to 20% is needed for fixed income for the family to live on. 20% is enough, easily, given what we do in our yield fund, which we haven't really talked about. But that beats debasement, and it's really doing quite well in terms of yield. So we use fixed income, and it's like a cash bucket, shelters us from the volatility, and then the long-term wealth we think will come from the Bitcoin bucket. Things were doubling every year. That was how quickly it was growing. Now it's not compounding quite like that in terms of user adoption, but in terms of we're at 5% of the world, that'll compound very, very quickly because there's an adoption curve, right? Once you hit 16%, that's when you hit mainstream. It gets to 50% very, very quickly.
Yeah, when you map that against decreasing supply and another doubling in the adoption, this gets pretty interesting.
Yeah, and you think about it being barely over $1 trillion, and the speed of the adoption, and the fact that more than 99% of global wealth is not invested yet, and the kind of reflexive nature of this investment that like $1 invested can shift market cap $5 in a bull market. Bitcoin's set to explode into a very high number in the coming years, given this adoption. Very reliable adoption.
Yeah, interesting. And the ETFs have obviously pushed this all forward as well.
Yeah, and so it's very, very easy now for Bitcoin to be argued as a credible investment now that you've got these ETFs, you've got BlackRock recommending allocations as high as above 70% in some analyst reports. Fidelity, I think, is 3% allocation. You just run that, say 3% of $550 trillion goes into Bitcoin, multiplied by anything from 1 to 5x, depending on where we are in the cycle. You get to some very large numbers very quickly.
Woo notes that its 4-year cycles are becoming less pronounced. Over time, these cycles may give way to patterns driven purely by global liquidity rather than halving events. Eventually, the diminishing impact of halvings will coincide with Bitcoin's transition into a stable, widely adopted asset. Woo also addresses the historical context of money. Comparing Bitcoin to gold and silver, which have centuries of trust as monetary assets, he highlights Bitcoin's rapid 15-year ascent. While gold and silver benefited from millennia of trust building, Bitcoin's digital nature and network effects are propelling its adoption at an unprecedented pace.
I just see, and it's been largely true, that the drawdown's getting less and less as the size increases. That's normal. I also think that the halvenings are less impactful. And, eventually it'll be just global liquidity pushing. I mean, once all Bitcoins are mined, obviously, the halvenings aren't going to change anything. So somewhere along the way, it's not like these crazy 4-year, very marked cycles. And whether it's this cycle, the next, or maybe the one after that, in 4-year cycles, I think it'll be the last, cycle, and we'll see much more normal wiggles of macro. We have 15 years of data on it now, and it is going to be quick, and it's not even up for debate. People may want to debate it, but they haven't looked at the data. As of where we are now, it's very reliably 500 million people that have some sort of ownership of Bitcoin in 15 years. And if you run this data forward, we will be 1 billion people having some ownership of Bitcoin by the end of this decade. And by 2035, if this curve continues its path, we're pretty much near majority adoption of Bitcoin as an investment holding. And then the question is this going to be a reserve currency? Will it be money? Will it be a medium of exchange? But it's happening very, very quickly. And, like MicroStrategy has really kind of been the proof in the pudding in a way with their Bitcoin strategy. Look at them. They're a software company that really was not that competitive by Michael Saylor's own words. They took on this treasury strategy, and now they're the best performing stock on the S&P 500, or NASDAQ.
Yeah.
Beating out things like
or even NVIDIA.
Even NVIDIA, yep, Amazon, Microsoft, so forth, Google. This is a really interesting thing when you look at 10,000 years of money, and you find that we've had first inklings of gold coins and stuff for like I think 700 BC, and now we talk about money going from, world reserve currencies changing every 100 years. But you'll find that, like, they were always tagged to gold or silver until this very, very brief experiment of fiat since 1971 when the gold window was closed. And that's never gone well in the history of the world. So I don't really look at this era of 50 years almost, roughly, as a real zone. You see Germany went off the gold standard, and it hyperinflated almost immediately. The whole world's on this fiat right now. I think it's a brief experiment. So now the bigger picture is Bitcoin's in the process or attempting to flip gold and silver, like multi-thousand years of Lindy effect, building trust in gold, silver as a form of money. And it's only 15 years into this.
Willy Woo envisions a future where Bitcoin surpasses gold and silver as a store of value, especially as the world moves away from the fiat experiment initiated in 1971. With governments globally engaged in monetary debasement, Bitcoin's fixed supply and decentralized nature make it a logical alternative. Woo references MicroStrategy as a case study. By adopting a Bitcoin-centric treasury strategy, the company transformed itself into one of the best-performing stocks, outpacing even tech giants like NVIDIA and Amazon. This shift underscores Bitcoin's potential to redefine financial strategies and investment portfolios.